For some time now, there's been significant risks for Tesla as we approach their latest earnings after the close this Tuesday. Competing with established car manufacturers does pose several risks for Tesla, which critics have long cautioned against exuberance with Tesla stock. As more traditional automakers enter the electric vehicle market, there is a risk of increased competition and market saturation. This could lead to price wars and reduced profit margin for Tesla. Think of the established automakers like BMW, Mercedes-Benz, and Audi. Many customers will be loyal to their brands and may be less inclined to switch to Tesla. Related to this, other car manufacturers have been investing heavily in electric vehicle technology and autonomous driving systems. If they develop superior technology or innovations that outperform Tesla's offerings, it could again erode Tesla's market share and competitive edge. Think of Toyota's recently announced battery progress. Also, look at how China is exerting itself on the electric vehicle market. So with this being said, how will Tesla's earnings on Tuesday match up to the risks? Seasonally, we are heading into a weak period. Notice, look, over the last 14 years, from the 22nd of April to the 20th of May, there's been around a 70% downside in Tesla stock, and the average return is minus 0.85%, but that's largely been shielded by this outsized gain in 2013. If we just dive into the detail and we get rid of that 2013 offering, there we go, and let's just get rid of that there. You see then, actually the average return is 5.89%, and it does leave Tesla's shares vulnerable to potentially more downside from a seasonal perspective than otherwise may be indicated. So looking at Tesla's weekly technicals, you can see, look at this, we're in that big support area around that 140 region. If there's a clean break of this level, we could see more downside, and it's likely to encourage momentum sellers. It's also an obvious place for sellers to define and limit their risk on a clean break. So obviously trade risks, the major trade risk here is that previous seasonal patterns don't necessarily repeat themselves each year. And of course, if Tesla has some very strong earnings and they've got a really pronounced plan to turn things around, that could buck this seasonal trend. Sign up here for thousands of more seasonal insights on Season X that are just waiting to be revealed. Remember, don't just trade it, season exit.